So good afternoon all. So we'll be discussing in detail about the tax proposals of the budget. So before running through the budget, we all know that it is just uh, a single day in a year where so much of happening. Okay. So so much of events, like what is planned across the year, throughout the year. So what is expected? Where does India head towards? So all these plans, proposals are being proposed on one single day. So it's more anticipated and discussed way forward. So we'll first understand. So a budget will always structured with first about what happened in the last year or what went across, and then the policy proposals, and then you have your tax proposals, both the direct tax and indirect tax proposals. So she first touched upon various policy proposals. She split it into three broad areas, calling it as aspiration. One another is about development, another is about the carrying. So these are all broad policy proposals of looking at where the government is interested about spending and taking it forward. So the first aspect about aspiration is about your, she split it into agriculture. She spoke about wellness, health and all those objects, and then the education things. Then she touched upon economic development, about the industry development, how we work on this ease of doing business, where have we improved, what are the steps forward, and all those things she discussed in industry development, about how we are going to involve technology into the India's growth prospects and all other things. The final thing she touched upon, caring society, which was about women welfare, and she also spoke about tourism, how we wanted to focus on tourism, culture, and also other socio-economic development. So these are the broad areas she touched upon. She also said that this has to be taken care by two broad aspects. One is governance, and another is the financial attribute of a particular country. So when she said governance, she said how they are planning to about develop the new recruitment agency for even non-gazetted officers, and also touched upon the financial aspects about how she is planning to bring in money into the system by disinvesting LIC. So that's one of the big policy announcements that she has made. She has said that she'll disinvest LIC to bring in some more money into the kitty. So that's one of her plans of what she has looked into it. So of all these things, she did this went into a long speech what she spoke about it, but little she spoke about various tax proposals. So most are hidden agenda, which was identified through the finance bill and the memorandum, which was later tabled in the parliament on that day. So we'll see one by one about what are the various tax proposals that she has announced. So first, as we go ahead, it will be about the new tax regime that she has brought in. So we all know that she has introduced a new tax regime, which is about 2.5 lakhs of slab for each of the things. So she has brought in a new slab between 5 to 7.5, 7.5 to 10, 10 to 12.5, and then 12.5 to 15. And then above 15 remains the same. So the 30% slab remains the same. She has not changed the surcharge. She has just brought a small change to the surcharge, whereby she has said wherever you have a short-term capital gain and long-term capital gain, in accordance to the security transaction tax levied capital gains, that is your 111A and 112A, whereby she has said the maximum surcharge will remain to be 15%, and there is no 25% or 37% surcharge for people who have short-term capital gain for the income that is related to short-term capital gain from 111A and long-term capital gain from 112A. So this surcharge for these two incomes, which is not and which is restricted to 15% of surcharge, which means if your income from short-term capital gain is even 3 crores, your surcharge will continue to remain at 15%, and it will not be the new slab of 37%, which was introduced last year. So that is a subtle change that she has brought into the finance budget. And when you're talking about this new tax regime, she has said that it is almost like you don't claim anything, any benefit, any sort of benefit that you can derive out of an income. For example, we talk about LIC, we talk about public provident fund, the housing loan interest, housing loan principal. So all these benefits, whatever we are talking about, so all these benefits is being taken away, if taken away. So it's an optional benefit. So if you do not claim those, what will be your tax rate? So the various benefits that you'll have to sacrifice to go into this new tax regime is your leave travel concession, your standard deduction, including the professional tax. So all three that comes under 16, your standard deduction, your entertainment allowance, and your professional tax. So all these things you can't claim further. and other 80C deductions, 80D, 80E, whatever we are talking about. Even this new 80EEA, which is about this interest on housing loan, where you get this additional 1.5 lakhs, you can't claim. Your regular interest on housing loan, which you will claim under section 24, is no more. You can't take the benefit of that if you are opting new tax regime. Whatever we are saying you can't take is an option that she has provided. So you henceforth will have to calculate it twice, one in the aspect of new tax regime and one in the aspect of old tax regime, and see which is more beneficial to you. So if you are a businessman, then you can't claim your additional depreciation. You can't take any deductions under section 35 AD, scientific research expenditure under section 35. So all these could not be claimed. The only benefit that she has given, she has allowed in the aspect of chapter 6A is two benefits. One is your national pension scheme, which is NPS, which is covered under 80CCD. There are two limbs to 80CCD. One is your employee contribution, other is employer contribution. So the employer contribution doesn't even fall under the limit of 80CCE, that is your 1.5 lakhs. So whatever limit we are talking about, 1.5 lakh in 80CC, does not include the contribution of NPS by an employer. So this is not part of your limit of 1.5 lakhs even today. So that part of deposit to NPS is even allowed in the new tax regime. So the only savings that is allowed to you could be a deposit by the employer into national pension scheme, which is restricted to 10% of your salary. So that's the only deduction that is eligible. And if you're a businessman, the only deduction eligible will be your 80JJAA, which is your additional employee cost. If you're a manufacturing entity or a specified industry and you recruit new employees during the period, there is an provision whereby you can claim 30% of employee cost per year for a period of 3 years. So this can be you can claim the deduction even if you are following the new tax regime. So these are the only two benefits that is being given that continues to be could be enjoyed by the assessee even if they prefer the new tax regime. This is only applicable for your individuals and individuals even if they are in business or in any other income. So we'll just look into it. What are the possible incomes that an individual could be earning who could probably prefer this scheme? So an individual could be earning a salary, a pension, or could only be an income from house property, or an investor who's only gaining capital gain income, probably could be a presumptive business or any other business or other sources. These are the broad categories. And any individual, probably we can split it into three categories of deductions. Let's say a maximum benefit derived is could be 7.5 lakhs, where you claim all the maximum benefits that is available to you. So all these are assumptions. So let's assume a maximum benefit that you can derive out of it is after claiming 80C, your 80D, your house property loss, all those benefits that probably you could take care of could be up to 7.5 lakhs. So an individual could enjoy maximum, let's say, up to 7.5 lakhs. An ordinary person which we could hear of, let's say they're having an house property, they claim this 80C through the PF contributions that they get off, because most of the employees 80C gets filled up with PF contributions itself. So such employees, let's say they could get a tax exemption of up to 4 lakhs. The third category could be a very minimum category which they don't even house property. Only thing is your LIC investments and any other your normal salary standard deduction that you get off. So this could be there. Or there could be a fourth category who's not claiming anything. They're just doing a presumptive business under 20 lakhs, not even registered under GST, just claiming a presumptive tax business. So there could be a fourth category where there is no one claiming, where they're not claiming any deductions at all. Let's see the tax impact of these, each of the things above 7.5 lakhs. So we'll start with 7.5 lakhs. What will be the savings or extra outgo under the each category? So if you work out under each of the categories, whatever we discussed in the previous slide, they could be, let's say if they are one who is claiming at a maximum, in case if they are claiming a maximum tax benefit of 7.5 lakhs, which we talk about, including your house property, your ATC, your standard deduction, all those things, house, HRA, leave travel concession, everything included, they will not at all benefit from the new tax regime. So they will definitely, they are not going to opt for this new scheme. Yes, sir.
What would allow out here? Are we speaking about disallowance of loss or disallowance of interest claims?
Disallowance of? No, the tax difference. So,
in fact, my doubt is fundamental. here when you are listing out the HP benefit of 2 lakh rupees.
Yeah.
If you say that somebody is going to opt for the new scheme, is not eligible for this loss benefit.
You'll have to forego this 2 lakhs of loss.
Supposing my property income is 10 lakhs, my HP interest is 4 lakhs, 6 lakhs is still taxable.
Yes, still taxable. And in fact, the one which has to be foregone, the interest which will have to be foregone in the new tax regime is only the interest on self-occupied property. Yeah, the only loss on self-occupied property, you will not be able to claim it. If it's anything related to a rental property, you can claim the rental income, but loss could not be carried forward. So you can't claim the loss at all at any point. 24 deduction is available for house property on which you are earning rental income. So what has to be foregone is only the interest interest expenditure on self-occupied property. So that alone is could not be claimed. So at the end of the day, if you actually see a person who is not at all claiming any of the benefits, even the 1.5 lakhs ATC or someone could, if he is earning 7.5 lakhs, he will have a tax savings of 25,000 if he is opting the new tax regime. Otherwise, if he is a minimum case where we are saying he is only having a standard deduction of 50,000 or 1.5 lakhs, he does not have house property, probably he can start saving if his income is more than 12.5 lakhs. So this could be the broad computation. So simply putting it, probably we can put it in a manner where if he is having a self-occupied house property, there is no way that he would be preferring to claim the new tax regime. So he will not opt for a new tax regime because at any point in time, if he is having a house property, it will not be beneficial considering that he is a salaried employee and it's already takes care of PF deductions and other standard deduction which will come to him automatically for the sake of working. So all these benefits can be summarized that if he has an house property loss, it will be hard for him to forego this existing tax regime and prefer the new tax regime because it may not be beneficial to him. So this is there. So then who shall it benefit? If you actually look at it more broader view or more deeper, it will actually look like a family member. For example, if it's an husband and wife, and husband is claiming all the deduction, wife is not claiming any of the chapter 6A deductions or any of those deductions, who just has some investment income from FDs, interest income and all those things, then probably she can opt for it because she will not have any chapter 6A deductions at all. So she can opt for it, or the spouse can opt for prefer the new tax regime. So that is one of the area. Another people, like you have these property owners who have multiple properties, their income will not be anything other than just earning the rental. So they would not have focused anything on investing in LIC or any of that concept. So they could also probably think of this new tax regime which will also benefit them. Then there are various people who prefer presumptive tax business just for the sake of accounting their income. So probably they may not have a proper books of account but will be earning income in one way or other. So those people will not even think of this ATC and other things. All they need is report 8% of their turnover as an income and just go ahead and file tax as a process oriented approach. So they don't do it for any other reason but for claiming loans or any other support, filing your submissions to the banks. So such people who are in presumptive tax business can also look forward of opting this new tax regime. So these are the possible options. So on a broader aspect, the government is looking you to spend more than save more. So they want money to come into the fund, so into the system. So they want you to spend, they want the consumers to keep spending so that the spending pattern increases and investment increases into the country. So this is on the broader aspect what government is generally looking at it through introducing this new tax regime. Yes, sir.
On this 12.5 lakhs income slab, we say that new regime versus the previous regime. The 2,500 minimum, you are saying that they have spent, I mean, that category people are end up paying more.
The red ones are they will not benefit from the new tax regime. They will not benefit. So the only these cases where if you are earning at 12.5 lakhs and you only have this, you have an housing property and you have this ATC and ATD standard deduction, then probably you can save 2,500 tax if you are having an income of 12.5 lakhs. So the red ones are negative, like you will be paying more if you are opting new tax regime.
Just to correct my understanding.
Yes, sir.
If they are in 7.5 lakhs income or 10 lakhs income, earlier if they have a 2 lakhs benefit on
housing, yeah.
Now earlier they'll be paying the old rate of tax on 8 lakhs, right?
5.5 lakhs. 7.5 lakhs is their
7.5
income.
5.5.
5.5, yeah.
Now they'll be paying new rate
On
of
7.5.
tax on
7.5, correct.
That
Yeah.
difference is
Yes, exactly. So this income, whatever you are talking about, is giving without giving effect of all these tax deductions. What if you add 7.5? So technically, these people, if you add the 7.5, the entire thing as maximum category, they will not be paying anything in the old slab, but they'll still be paying 37,500 as per the new tax regime. So that's a broad understanding of the new tax regime. Who can opt and whom will it benefit? So
And,
can yes.
that old tax regime is 7.5 lakhs. To get that benefit, they will have to invest it in ETC.
Exactly, yeah.
Now
So
that their cash flow will be there.
yes, so they can have the money and prefer for this new tax regime and probably spend it in somewhere else
Or
and earn
invest
more.
and deposit it,
Exactly.
they get a 10% return,
Yeah.
which will equate this.
Which will equal
be
this.
more than this.
Yeah. So their intention is to make you spend more and bring the money into the system. So she has not changed much about the corporate tax rates. The only change that she has brought in is about the power generation unit is also has been brought under a specific company list of 115 BAB, where they were eligible for taxation at a 15% subsidized rate. So for these people, for these corporates, there is no MAT. Obviously, like these specified rates are only if they are not opting for any deductions. So if they are not going for any deductions under your 35 AD, 35 or your 80 deductions, investment linked deductions, so any of these deductions, if you're not claiming any of this, including things like your additional depreciation, so if you're not going for any of the benefits that a corporate world could enjoy, they could enjoy the benefit of 15%. Those are companies which have been incorporated after 1st October 2019 and started commencement of operations before 2023. So these companies could enjoy a benefit of 15%. This was restricted only to a manufacturing entity of any article or thing, but it is now extended to power generation units also. So for henceforth, power generation all units could also opt for 15%, provided they forego all their carry forward losses, all the deductions that they could enjoy being a power sector unit. So only then they can go for this 15%. Rest of the rates remains unchanged. So the 25%, yes sir.
So power generation companies that are earlier eligible for straight line method of depreciation. That is a compulsion, right? That is
No, the straight line method for power generation unit is optional at the first year. So they'll have to prefer a method in the first year of their operation. If they choose a straight line method, it continue to be remaining a straight line method for the rest of their period.
So that has got nothing to do with
Nothing to do. They can still choose. The only thing is anything which is in related to additional depreciation, which was earlier eligible for a WDV method of adoption, where they buy this new plant and machine and other things, they can't claim that additional depreciation. So such corporates could enjoy this 15%. This another category was your specified companies, which is more, which was eligible for 22%. Was one category of companies which is more into research and development and biotechnology in other places, where they were eligible for a special rate of 22%. And there is a third category whereby if you are a manufacturer after 1st March 2016, you are eligible for a beneficial rate of 25%. Yes, sir.
This manufacturer of specific article thing. Two questions here. One, like any specific articles notified?
Yeah, it has only been specified that you should not be manufacturing listed in the 11th schedule, which is basically your tobacco, your alcohol, any of the things which is hazardous or which government does not want you to manufacture are the only list of items.
The second question is like, what about the companies that are both into trading and manufacturing?
Yeah, the income tax always recommends books of accounts for different units as a separate unit. So each of the unit has to be categorized as a separate entity by itself. So that's how you're supposed to account it for the purpose of income tax. So if you have a unit which is into both, you can use this beneficial rate only for the unit which will fall into this category.
That does effectively mean that the company is doing both activities, the manufacturing segment alone can enjoy the lower tax rate and
they can enjoy. Exactly, yeah.
Normal tax.
Yeah, but the whole company should have been incorporated after 1st October 2019.
Right.
And then the old slab of where you said based on the turnover. If your turnover is more than less than 400 crores in the previous year 2017-18, then also you can opt for a lower rate of 25%. Here there is no restriction of not claiming additional depreciation, not carry forwarding your loss or any such benefits are not taken away. So you're free to do your business with all the income tax benefits that is available to you. So that is for a corporate which has a total turnover less than 400 crores in the previous year 2017-18 can opt for a rate of 25%. Rest of the corporates continue to remain at 30%. There is no change in your surcharges or something. MAT continues to remain at 15%. It was just reduced recently from 18.5 to 15%. So it continues to remain at 15%. There is no requirement of MAT for those units which are applicable under 15% and 22%. So MAT is not applicable for these two set of corporates. Rest of the companies will have to adhere to the MAT provisions. For units in IFSC, which is your International Financial Service Center, which is similar to your SEZ for non-financial institutions. So for such institution, the MAT is at a beneficial rate of 9%, available for such entities located in IFSC. So these are the general rate provisions. What can, yes?
If the company is having a turnover of 500 crores and 100 crores is for the specified manufacturer of specified article, then if I claim a beneficial rate of 22% for the 100 crores, then will I be able to claim 25% for the remaining? If I maintain separate books of accounts, because the remaining is only 400, or would it be considered 500?
No, this 400 crores is for the entity as a whole. So if the entity is less than 400 crores, then only then you can opt for this rate. So this is not unit related. It is for the entire entity. If you are opting for less than 400 crores, then you can opt for this. So there is no segmental in this particular category. We will talk about this section 80M a little later when we are discussing about dividend distribution tax. So the only benefit which can be allowed even in this case of 15%, 22 and 25% is the benefit of 80M. It's about dividend. We'll discuss it in the subsequent slide when we are talking about dividend distribution tax. Similar to individuals, she has also brought in a new tax regime for cooperative societies, which is also optional. You can prefer that. So whereby you forego all your benefits available to the cooperative society, similar to what we are talking about for individuals, in line with the same provision. So you don't claim your additional depreciation, you don't claim your losses or something of that sort. So all this comes under, you can prefer a rate of 22% instead of your regular slab rate, which was at the end of the day, it is almost like your income is taxed at 30%, because only the first 20,000 undergoes a lower rate of 10 and 20%. From your income of 20,000, it is only taxed at 30%. So this is now converted into a new tax regime with an effective rate of 22%. So that's an effective rate. So rest remains same, similar to what we discussed in individual. Firm continues to be taxed at 30%. There is no change in the rate of firm. All these companies, all these entities, the margin surcharge has not undergone any changes. When we talk about surcharge, the marginal relief also remains same for all these entities. So whosoever is need to pay surcharge will have to work out whether the marginal relief is applicable to them. If so, they'll have to utilize the benefit of marginal relief.